Welcome back to the Pro Ticker Podcast, Thursday morning edition covering major financial magazine headlines.
Sounds good.
Okay, you ready to talk market mayhem?
Oh, yeah.
We've got a stack of articles about the post-election landscape, and let me tell you, things are getting spicy.
Spicy is an understatement. It seems like the market is throwing a victory party and everybody's invited.
Everybody.
Even Bitcoin.
You're not kidding. We just had the U.S. presidential election, and Donald Trump secured a second term, defeating Kamala Harris, and the market reaction? Well, euphoric might be the word, wouldn't you say?
Euphoric and maybe a little bit bewildered.
Okay.
According to Bloomberg, the Dow Jones skyrocketed over 1,500 points yesterday.
Wow.
The S&P 500 and NASDAQ, they're both celebrating all-time highs.
All-time highs. That's got to have people scrambling around, trying to figure out what this means for their investments, especially with the second Trump term.
Absolutely. And it's not just the usual suspects, the Russell 2000, which, for our listeners who might not be familiar, tracks small-cap stocks. Also saw a huge jump, over 5%. That kind of broad-based rally suggests there's a lot of faith in Trump's policies, at least for the short term.
Right. And that brings us to Bitcoin. Bloomberg is reporting that it surged to record highs yesterday.
Oh, wow.
You think it's Trump's past pro-crypto stance that's fueling this?
It's definitely playing a role. Remember all those tweets about Bitcoin?
Oh, yeah.
Some investors are betting that a second Trump administration could be even more favorable to cryptocurrencies, maybe even pave the way for more mainstream acceptance and investment.
So we've got stocks soaring, Bitcoin partying like it's 2017.
It really is.
Is anything not going up?
Well, the U.S. dollar is flexing its muscles, getting stronger.
Okay.
But here's where it gets interesting. Bloomberg mentioned that some hedge funds, those are the big league investors who love a calculated gamble, are actually betting on a weaker dollar down the line.
Really?
They're thinking if Trump's policies don't deliver in the long run, the dollar could take a hit.
That's a bold move. Betting against the dollar when it's strong.
It feels like we're seeing a replay of the Trump trade, doesn't it?
Yeah.
All that buzz during his first term about deregulation, tax cuts, infrastructure spending that really fueled the market back then.
The echoes of 2016 are definitely there, no doubt.
Okay.
But what fascinates me is that this time around, things feel different.
Okay.
The Wall Street Journal had a piece on this.
Okay.
The economic landscape isn't the same, and global factors are playing a much bigger role. We can't just assume history will repeat itself.
Right. Things are definitely more complex this time around.
Definitely.
Let's talk about the Federal Reserve, the Fed.
Okay.
Bloomberg says they're expected to cut interest rates by 25 basis points on Thursday, following that half-point cut they did in September.
This is where things get really tricky. Trump's win puts a lot of pressure on Fed Chair Jerome Powell.
Right.
Inflation is already a concern, and now we have the possibility of even more government spending under a second Trump term.
Yeah.
Powell's walking a tightrope. Bloomberg even quoted James Vokins, a portfolio manager at Aviva Investors, who said, "What would be interesting is not so much the cut, but communication around December and next year. It will be a very difficult situation, and it will be very difficult communication to manage. He will have to be careful not to be too firm on any particular direction."
That's a sharp observation. The markets are going to be dissecting Powell's every word, trying to figure out what a second Trump term means for the Fed's long-term strategy.
Okay, let's shift gears for a moment and look at what's happening globally. Bloomberg reports that European markets were initially hesitant, but then they started seeing the potential upside. If Trump's policies boost the U.S. economy, they're hoping for some of that growth to spill over.
A strong U.S. economy often lifts other boats, so there's a sense of cautious optimism in Europe, as the Wall Street Journal pointed out. But they're also dealing with their own set of issues. The Bank of England just cut rates. But their governor, Andrew Bailey, is predicting a slow and steady approach due to the impact of the UK's recent budget on inflation.
And what about China? Bloomberg mentioned that Chinese shares are actually rebounding strongly robust exports, and hopes for more stimulus seem to be overriding any anxieties about the U.S. election outcome.
China is an interesting case. They're definitely aware of what's happening with the U.S. election, but as the Wall Street Journal article suggested, their main focus is on internal stability and keeping their own economic engine running smoothly.
So zooming out a bit, we've got a lot of moving parts in the global economy right now. Feels a bit like a high-stakes game of chess, doesn't it?
It does.
Everyone trying to anticipate the next move.
For sure. And while we're on the topic of individual moves, there are some company-specific stories that are really catching my eye. For instance, Lyft is having a moment.
Oh, yeah.
The Wall Street Journal reports that their shares soared 22% in pre-market trading after exceeding profit forecasts. It seems they've really found their footing in the ride-hailing market.
That's a great example of a company thriving in this post-election landscape. But on the flip side, Bloomberg reported that SolarEdge Technologies, a big player in the renewable energy equipment space, took a tumble. Their stock plummeted as much as 21% in early trading after a $1 billion write-down and a pretty weak outlook.
That's a significant drop, and it could be a sign of investor nervousness about what a second Trump administration means for renewable energy. After all, Trump has been a vocal supporter of traditional energy sources like oil and gas.
So are investors worried that renewable energy companies might face some headwinds under a second Trump term?
That's certainly a possibility. We'll have to wait and see how Trump's energy policies unfold over the next 4 years, but this early market reaction suggests there's some apprehension.
And what's happening in the tech world? Any notable stories there?
Well, Bloomberg is reporting that chipmaker ARM Holdings issued a disappointing sales forecast. Looks like the smartphone market recovery might be slower than anticipated.
So not all tech companies are riding the wave of this market boom.
Exactly. And this is a reminder that even in a generally positive market environment, there will always be winners and losers. It's crucial to look at the fundamentals of individual companies, not just get swept up in the overall market sentiment.
Speaking of individual companies facing challenges, Bloomberg also had news from the auto industry. Apparently, Nissan Motor Co. is cutting its annual profit outlook and announcing plans to eliminate thousands of jobs globally. They're trying to counter declining sales in some major markets.
This news from Nissan is a reminder that the global economy is facing some headwinds. As the Wall Street Journal has been highlighting, the auto industry in particular is very sensitive to economic slowdowns. So Nissan's struggles could be a sign of broader economic weakness on the horizon.
And then there's Boeing. Remember that strike that was really putting a dent in their jetliner production? Both Bloomberg and the Wall Street Journal are reporting that the workers have voted to end the strike.
That's huge news for Boeing, and it comes as a sigh of relief for the aerospace industry as a whole. They were losing millions each day because of the strike, so this means they can finally start catching up on their backlog of orders.
It's a big win for Boeing, no doubt, but they still have a long road ahead.
You're right, they're not out of the woods yet. Rebuilding trust with customers and regulators after those 737 MAX crashes is going to be a long and difficult process. The Wall Street Journal had an insightful piece on the challenges Boeing is facing, even with the strike ending.
On a more positive note, it seems like Palantir Technologies is riding high. Both Bloomberg and the Wall Street Journal highlighted their stock surge in pre-market trading. They're reporting record profits and are seeing strong demand for their AI software.
Palantir's success is definitely catching the eye of investors. It seems everyone's jumping on the AI bandwagon these days.
AI is definitely a hot topic, but is all this hype justified?
It's important to remember that AI is still a relatively young technology. There's a lot of potential, but also a lot of uncertainty. The Wall Street Journal had a great piece cautioning investors about the risks of blindly investing in AI just because it's trendy.
Speaking of trends, let's talk about Nintendo. Bloomberg is reporting that they slashed their full-year outlook.
It seems the demand for their Switch console is waning. They've reported 5 straight quarters of profit declines. That's a pretty clear sign that they need to shake things up.
And then there's the potential merger between Vodafone and 3S. The Wall Street Journal is reporting that the deal could be worth a whopping $15 billion, or $19.5 billion.
But there's a catch. To get the green light, they'd need to commit to investing in a major upgrade of the UK's mobile network.
That's a pretty big if. But if they pull it off, it could be a game changer for the UK telecoms landscape.
Speaking of game changers, Bloomberg has an interesting story about Apple. Apparently, they're exploring a move into smart glasses. They've got an internal team studying current products on the market.
So after conquering the smartphone world, they're setting their sights on our faces.
It seems so. Apple is known for its sleek design and user-friendly interfaces. So if they can crack the smart glasses market, it could be huge.
But they're not alone, right? There are already a few players in that space like Google and Facebook.
Exactly. It'll be interesting to see how Apple differentiates itself if they decide to enter the market.
And on a less positive note, Bloomberg is reporting that Schroders plc, a global asset management firm, saw its shares tumble after reporting a significant amount of quarterly outflows, something like $2.3 billion or $3 billion.
That's a lot of money leaving their funds. They even warned of potentially $10 billion more to come, citing investor concerns about market volatility and economic uncertainty.
It seems some investors are getting spooked by the current global landscape. And speaking of spooked, Bloomberg is reporting that Saudi Arabia's oil giant, Aramco, is maintaining their $31 billion dividend to help fund the state despite rising debt.
They're clearly prioritizing those shareholder payouts even as oil prices remain unpredictable.
It's a risky move, but it underscores how crucial Aramco is to the Saudi Arabian economy.
As the world's largest oil producer, their decisions have a ripple effect on the global energy market.
And we can't forget about Meta, formerly known as Facebook.
Right.
They've been under the microscope lately for their handling of user data and their role in the spread of misinformation. Now, according to Bloomberg, they're facing a potential ban in Indonesia.
Wow, that's a big deal. Indonesia is a massive market for Meta with millions of users.
What are they doing to prevent this ban?
Well, Bloomberg reports that to appease regulators and maintain their presence in this key market, Meta has offered to make additional investments in Indonesia.
It's a high-stakes game, and it highlights the challenges tech giants like Meta are facing as they try to navigate the increasingly complex regulatory landscape around the world.
Absolutely. The rules of the game are changing, and companies like Meta need to adapt if they want to thrive in the long run.
And then there's Lego, not a company you usually hear about in financial news.
I know, right?
But they've made a move that's got everyone talking.
What's that?
They're going all in on sustainable materials. Both Bloomberg and the Wall Street Journal reported that they're shifting away from traditional plastics and investing billions into research and development to create bricks made from plant-based or recycled materials.
That's a massive undertaking for a company known for its plastic bricks, but it shows how seriously they're taking sustainability.
And investors are noticing there's a growing trend of investors looking for companies that are committed to environmental, social, and governance factors, what they call ESG. Lego's move positions them well to attract this type of investment.
It's a smart move both for business and the environment.
Absolutely. It's a win-win. Lego reduces their environmental impact, appeals to eco-conscious consumers, and attracts ESG-focused investors.
Makes sense.
Okay, so we've covered a lot of ground today, from the market's reaction to Trump's re-election to Lego's sustainability push. It's been a whirlwind, but we've given our listeners a good overview of the key financial stories making headlines.
Indeed. It's been a day of surprises and shifting landscapes, but that's what makes the financial markets so fascinating. There's always something new to learn and analyze.
Speaking of learning and analyzing, I think it's time to turn our attention to a topic that's been on everyone's mind lately, and that is
Artificial intelligence, or AI.
Right. It seems like every day there's a new breakthrough or a new application for AI. It's changing the world as we know it, and the financial markets are no exception.
Absolutely. AI is transforming the way we invest, trade, and manage risk. It's automating tasks that were once done by humans, and it's providing insights that were previously hidden.
It's almost like having a super-powered financial advisor at your fingertips.
In a way, yes. AI can analyze vast amounts of data in real time, identify patterns, and make predictions with a speed and accuracy that humans simply can't match.
But with all this power comes responsibility, right? There are concerns about the potential for AI to be misused or to create unintended consequences.
Those concerns are valid. It's important that we develop and deploy AI in a responsible and ethical manner. We need to make sure that it's used for good, not for harm.
So where do you see AI heading in the future? What kind of impact do you think it will have on the financial markets in the years to come?
I think AI is going to become even more pervasive in finance. We'll see it being used in more and more areas, from portfolio management to fraud detection to customer service.
It sounds like we're on the cusp of a financial revolution.
In many ways, we already are. AI is changing the game, and those who embrace it will be the ones who thrive in this new era of finance.
Well, that's a thought-provoking note to end on, but before we go, I want to remind our listeners that we'll be back next week with another deep dive into the world of finance.
Until then, stay informed, stay curious, and stay ahead of the curve.
And as always, thanks for listening to the Pro Ticker Podcast.
We'll see you next time.
Now let's shift gears and talk about a topic that's been making waves in the world of investing, and that's ESG, which stands for Environmental, Social, and Governance.
Right, it's no longer just a niche trend. ESG investing has gone mainstream, with trillions of dollars now flowing into funds that consider these factors.
Investors are increasingly realizing that sustainability and social responsibility are not just good for the world, they can also be good for their portfolios.
Exactly. Companies that score high on ESG factors tend to be better managed, more innovative, and less risky in the long run.
So what are some of the key trends in ESG investing that investors should be aware of?
Well, one trend is the growing focus on climate change. Investors are looking for companies that are reducing their carbon footprint and investing in renewable energy.
Another trend is the increasing attention to social issues, such as diversity and inclusion, labor rights, and data privacy.
Investors are recognizing that companies that treat their employees and customers fairly are more likely to be successful in the long term.
And then there's governance, which covers things like board diversity, executive compensation, and shareholder rights.
Investors want to make sure that companies are being run ethically and transparently.
So with all these factors to consider, how can investors actually incorporate ESG into their portfolios?
There are a number of ways investors can choose to invest in ESG-focused mutual funds or exchange-traded funds, ETFs.
They can also screen individual stocks for ESG factors or engage with companies to encourage them to improve their ESG performance.
The key is to do your research and find investments that align with your values and your financial goals.
Well, it's clear that ESG is here to stay, and it's going to continue to shape the investment landscape for years to come.
It's an exciting time to be an investor who cares about making a positive impact on the world.
Absolutely. Now let's move on to a sector that's been on fire lately, and that is
The technology sector, it's been a roller coaster ride with some companies soaring to new heights while others have stumbled.
the tech sector is always evolving, but it seems like the pace of innovation has accelerated in recent years.
AI, cloud computing, 5G, the metaverse, there's so much happening and it's hard to keep up.
So what are some of the key trends that are driving the tech sector right now?
Well, one trend is the continued growth of cloud computing. More and more businesses are moving their data and applications to the cloud, which is creating huge opportunities for companies like Amazon, Microsoft, and Google.
Another trend is the rise of artificial intelligence.
Mm.
We've already talked about the impact of AI on finance, but it's also transforming other industries from healthcare to transportation to manufacturing.
And then there's the metaverse, which is still in its early stages, but has the potential to revolutionize the way we interact with the digital world.
The metaverse is definitely a buzzword these days, but it's still unclear how it will all play out.
That's true. It's a lot of hype right now, but there's also a lot of potential. It's a space to watch closely.
Now, while some tech companies are thriving, others are facing challenges. We've already talked about the struggles of companies like Nintendo and ARM Holdings.
Right. The tech sector is not immune to economic downturns or shifts in consumer demand.
And there is always the risk of disruption. New technologies can emerge and quickly upend established players.
That's why it's important to be selective when investing in tech. Don't just chase the latest fad.
Do your research, look for companies with solid fundamentals, and be prepared for volatility.
Sound advice now. Let's turn our attention to a sector that's been in the spotlight for all the wrong reasons lately, and that is the banking sector. There have been some high-profile scandals and failures that have really shaken investor confidence.
It's been a rough ride for banks. We've seen collapses, executives resigning, and regulators trying to put out fires. It makes you wonder about the stability of the whole system.
It's definitely raised some red flags. The Wall Street Journal did a deep dive on this, and it seems like a perfect storm of factors led to this point.
What kind of factors? Give us the rundown.
Well, for one, there's the rise of those complex financial products that even experts struggle to understand, let alone regulate properly.
Right, those too big to fail scenarios. But it's not just the complexity, is it?
Not at all. Bloomberg had a piece on the culture in some of these institutions. It seems a culture of excessive risk-taking and, frankly, greed played a role as well.
And then there's the question of oversight. Did the regulators fail to do their jobs?
That's a debate that's raging right now. Some argue that regulators were asleep at the wheel, while others say they were simply outmatched by the complexity of the financial system.
So what's being done to fix the banking sector and prevent another crisis?
Regulators have been busy implementing reforms. Bloomberg highlighted some of the key changes, things like tougher capital requirements for banks and stricter oversight overall.
So are we making progress? Can we trust banks again?
It's going to take time to rebuild that trust. The Wall Street Journal had an op-ed arguing that true reform needs to go beyond regulations. It needs to address the underlying culture that led to these problems in the first place.
That makes sense. You can't just regulate away bad behavior.
Let's move on to a sector that's been quietly but steadily growing: healthcare, with the global population aging and demand for healthcare services rising. This sector seems poised for continued growth.
It's a sector that's always in demand. No matter what the economy is doing, people will always need healthcare. That makes it a pretty resilient sector, right?
Yeah.
Not as affected by economic downturns as others.
Exactly. And there are a lot of exciting developments happening in healthcare right now. Bloomberg did a great piece on personalized medicine.
Personalized medicine. What's that all about?
It's all about tailoring treatments to individual patients using advances in genomics and other technologies.
So not a one-size-fits-all approach anymore.
Exactly. And that's not all. We're also seeing a rise in digital health technologies, things like telemedicine, wearable devices, and health apps. The Wall Street Journal had a fascinating article on how these technologies are making healthcare more accessible and affordable.
And of course, we can't talk about healthcare without mentioning costs. They keep rising faster than inflation.
It's a huge challenge, but there are some innovative initiatives aiming to control those costs, like value-based care models and using technology to improve efficiency. Bloomberg had a detailed report on the different approaches being explored.
The healthcare sector is a complex ecosystem, but it seems like there's a lot of potential for innovation and growth.
Absolutely. It's a sector to watch closely, speaking of sectors in the spotlight. Let's talk energy. The war in Ukraine has really highlighted the importance of energy security and the need to diversify energy sources.
It's been a wake-up call for a lot of countries that were heavily reliant on Russian oil and gas.
That's right. The conflict has exposed the risks of relying on a single supplier for such a crucial resource.
So what does this mean for the energy sector going forward?
Well, as the Wall Street Journal pointed out, there's a renewed focus on renewable energy. Countries are eager to reduce their reliance on fossil fuels and accelerate the transition to cleaner energy sources.
And what about those countries that are still heavily reliant on fossil fuels?
They're scrambling to secure their energy supplies. Bloomberg highlighted the increased investment in energy infrastructure, things like pipelines, LNG terminals, and of course, renewable energy projects.
It sounds like the energy sector is on the verge of a major transformation.
It's a time of significant change, but also enormous opportunity. Companies that can adapt and innovate will be the ones who come out on top.
Now let's talk about a sector that often gets overlooked, but is crucial to, well, everyone. Agriculture. It literally feeds the world. But it's facing some serious challenges right now. Climate change, population growth, political instability.
It's a sector under immense pressure. The Wall Street Journal did a fantastic series on the challenges facing agriculture.
What are some of the key trends shaping the sector right now?
Well, one trend is the relentless increase in demand for food. The global population keeps growing and everyone needs to eat.
And that demand is running up against the realities of climate change. Bloomberg reported on the impact of extreme weather events on agriculture, droughts, floods, heat waves. They're all disrupting crop yields and threatening food security.
It's a dire situation, but there's also a growing movement towards sustainable agriculture practices. The Wall Street Journal had a hopeful piece on the rise of precision farming, organic farming, and regenerative agriculture.
So there's hope for a more sustainable and resilient food system.
There is, but it's going to take a concerted effort from governments, businesses, and consumers alike to make it happen.
Now let's switch gears to a sector that's been booming, at least until recently. Real estate, low interest rates, and rising home prices have made it a hot market.
It's been quite a ride, but there are signs that the market is cooling down, interest rates are creeping up, and affordability is becoming a major concern.
So is the real estate bubble about to burst?
It's probably too dramatic to call it a bubble, but a slowdown is definitely on the cards. Bloomberg had a piece predicting slower price growth and even some price declines in certain areas.
So is real estate still a good investment?
It can be, especially for the long term. Real estate is a tangible asset that can hedge against inflation.
But as always, location is key, right?
Absolutely. The Wall Street Journal stressed the importance of doing your research and buying in areas with strong fundamentals like job growth, population growth, and a good supply of housing.
Okay, let's move on to a sector that's often seen as boring, but is essential to our daily lives. Consumer staples. These are the companies that make the things we use every day. Food, beverages, household products, personal care items.
It's a sector that flies under the radar, but it's incredibly stable. Demand for these products is pretty consistent regardless of what the economy is doing.
So it's a good defensive sector, right?
Yeah.
Less volatile than others.
Exactly, but even consumer staples companies need to innovate. Bloomberg had a great article on the growing demand for healthier and more sustainable products.
It seems consumers are becoming more conscious about what they put in their bodies and the impact of their consumption on the planet.
They are, and they're also increasingly buying online. The Wall Street Journal highlighted the challenges traditional consumer staples companies are facing from the rise of e-commerce and competition from online retailers.
So it's not enough to just make the same old products anymore. Consumer staples companies need to adapt to the new retail landscape.
Absolutely. They need to find ways to reach consumers online and offer products that align with their evolving values.
Speaking of online, let's talk about the sector that's been on fire. No pun intended lately, commodities, oil, natural gas metals. agricultural products. It seems like commodity prices have been on a roller coaster ride.
The Wall Street Journal did a deep dive on the factors driving this volatility, things like supply and demand imbalances, geopolitical events, and overall economic uncertainty.
So what's the forecast for commodities going forward? Will the volatility continue?
It probably will. Bloomberg suggested that the same factors that have been driving prices up and down are likely to persist.
So is it risky to invest in commodities?
It can be, but for investors who are looking for diversification and a hedge against inflation, commodities can play a role. The key is to be aware of the risks and to do your research before diving in.
Speaking of diversification, let's talk about a sector that's been growing rapidly in recent years. E-commerce, with online shopping becoming increasingly popular. Companies like Amazon, Alibaba, and eBay are raking it in.
E-commerce has been one of the fastest growing sectors of the economy, and it's showing no signs of slowing down. Bloomberg had a fascinating report on the future of e-commerce.
What are some of the key trends shaping the sector right now?
Mobile shopping is huge. More and more people are using their smartphones and tablets to shop online.
It's so convenient. You can shop from anywhere, anytime.
Exactly. And then there's the rise of subscription services and online marketplaces. The Wall Street Journal had a great piece on how these models are disrupting traditional retail.
And what about delivery? It seems like everyone wants their purchases delivered as quickly as possible.
Speed and convenience are king. In e-commerce, companies are investing heavily in logistics and fulfillment to meet those demands.
The e-commerce sector is constantly innovating. It seems like there's always something new and exciting happening.
It is. It's a dynamic sector with enormous potential. Companies that can provide a seamless and convenient shopping experience will continue to thrive.
Now let's turn our attention to a sector that's been going through a massive transformation. Media and entertainment. The way we consume content has changed dramatically with the rise of streaming services, social media, and mobile devices.
It's a whole new world. The Wall Street Journal had a great analysis of how these changes are impacting traditional media companies.
So what are the big trends shaping this new media landscape?
Streaming services are dominating. Netflix, Disney+, HBO Max, they're all battling for our attention.
It seems like everyone's cutting the cord and subscribing to multiple streaming services.
They are. And social media has become a major force in content creation and distribution. Bloomberg had a piece on how influencers are changing the game.
And then there's gaming. It's not just for kids anymore. Esports and gaming are becoming mainstream forms of entertainment.
Absolutely. It's a huge market, and it's only getting bigger. The Wall Street Journal had an interesting piece on the investment opportunities in the gaming sector.
It seems like the media and entertainment landscape is constantly evolving. It's hard to keep up.
It is, but that's what makes it so exciting. Companies that can adapt to changing consumer preferences and embrace new technologies will be the ones who succeed.
Now let's talk about a sector that's often seen as a bellwether for the overall economy: transportation, airlines, railroads, trucking companies, shipping companies. They all play a vital role in moving people and goods around the world.
It's a sector that's very sensitive to economic cycles. When the economy is doing well, demand for transportation services goes up. When the economy slows down, demand drops.
So what's the outlook for the transportation sector going forward?
It's a mixed bag. As Bloomberg reported, some segments are doing better than others.
For example?
Well, the airline industry is bouncing back as the pandemic fades, and people are eager to travel again.
But it sounds like not all segments are recovering at the same pace.
Right. The trucking industry, for instance, is facing some serious headwinds. They're dealing with a shortage of drivers and soaring fuel costs.
The transportation sector is definitely facing some challenges, but as always, there are opportunities for companies that can adapt and innovate.
Absolutely. The sector is evolving, and companies that can embrace new technologies and find ways to improve efficiency will be the ones who come out on top.
Let's switch gears to a sector that's been gaining a lot of attention lately: clean energy. With climate change becoming an increasingly urgent issue, there's a growing push to transition away from fossil fuels and embrace renewable energy sources.
The clean energy sector is growing rapidly, with governments and businesses around the world investing heavily in solar, wind, hydro, and geothermal power.
It seems like clean energy is finally having its moment. What are some of the trends driving this growth?
Well, as Bloomberg reported, the cost of renewable energy technologies like solar panels and wind turbines has been falling dramatically. They're becoming more affordable than ever.
That's great news, but is it enough to make a real dent in our reliance on fossil fuels?
It's a step in the right direction, and there's also growing government support for renewable energy. The Wall Street Journal highlighted the various subsidies, tax breaks, and other incentives that governments are offering to encourage the adoption of clean energy.
And what about consumers? Are they demanding cleaner energy sources?
Absolutely. People are becoming more aware of the environmental benefits of renewable energy, and they're demanding it from their energy providers.
It seems like clean energy is not just a feel-good story anymore. It's becoming a major economic force.
It's a sector with enormous potential for growth. Companies that can develop and deploy innovative clean energy technologies are well positioned for success.
Let's shift our focus to a sector that's often seen as a luxury, but it's actually a significant part of the economy. Travel and leisure airlines, hotels, cruise lines, theme parks, casinos, resorts, they all cater to our desire to escape and experience new things.
It's a sector that's very sensitive to economic conditions. When people feel confident and flush with cash, they spend more on travel and leisure. But when the economy takes a downturn, they tighten their belts and cut back on discretionary spending.
So given the current economic uncertainty, what's the outlook for the travel and leisure sector?
It's a mixed bag, according to Bloomberg. Some segments are expected to bounce back strongly, while others are facing some headwinds.
For example,
Well, the cruise industry is anticipating a resurgence as the pandemic fades, and people feel more comfortable traveling on ships again.
it makes sense. People are eager to get back to cruising. But what about the other segments?
The airline industry is facing some challenges, rising fuel costs, and labor shortages are putting pressure on their profitability.
It sounds like the travel and leisure sector is navigating some choppy waters, but there are still opportunities for companies that can adapt and cater to changing consumer preferences.
Absolutely. The sector is evolving, and companies that can offer unique experiences and prioritize sustainability will be the ones who thrive.
Let's turn our attention to a sector that's been growing rapidly in recent years. Software, from Microsoft to Oracle SAP to Salesforce. These companies are developing the software that powers our digital world.
The software sector is a hotbed of innovation. It's constantly evolving as new technologies emerge.
What are some of the key trends driving growth in the software sector?
Cloud computing is huge. More and more businesses are moving their operations to the cloud, which is creating massive demand for cloud-based software solutions.
The cloud is definitely changing the game. It seems like everything is moving online.
It is, and that trend is only going to accelerate.
What other trends are shaping the software landscape?
Artificial intelligence and machine learning are playing an increasingly important role. Software companies are using AI to automate tasks, improve efficiency, and gain insights from data.
AI is everywhere these days. It's amazing to see how it's transforming different sectors.
It is, and then there's cybersecurity. As businesses become more reliant on technology, they're becoming more vulnerable to cyber attacks. This is driving huge demand for cybersecurity software.
Cybersecurity is definitely a growing concern. It seems like we're hearing about new data breaches and cyber attacks almost every day.
It's a constant cat and mouse game between hackers and cybersecurity professionals.
So the software sector is facing some challenges, but also has enormous potential for growth.
Absolutely. It's a dynamic and innovative sector, and companies that can develop cutting-edge software solutions will continue to thrive.
Now let's talk about a sector that's often overlooked, but it's the backbone of the global economy: manufacturing. These are the companies that produce the goods we use every day, from cars and airplanes to clothes and electronics.
The manufacturing sector is a major employer and a key driver of economic growth, but it's also facing some significant challenges.
What kind of challenges?
Well, as Bloomberg reported, rising labor costs are a major concern for manufacturers in developed countries. They're facing stiff competition from low-cost countries.
Globalization has definitely made it harder for manufacturers in developed countries to compete.
It has, but it's not just about labor cost. Manufacturers are also facing pressure to adopt new technologies and become more sustainable.
Technology is transforming the manufacturing landscape. What are some of the key trends?
Automation and robotics are becoming increasingly common in factories. Robots can perform repetitive tasks more efficiently and accurately than humans.
So is automation going to replace human workers in manufacturing?
That's a question that's being debated right now. Some experts believe that automation will lead to job losses, while others argue that it will create new jobs in areas like software development and robotics engineering.
It seems like the manufacturing sector is at a crossroads.
It is companies that can embrace new technologies and find ways to operate more efficiently and sustainably will be the ones who succeed.
Let's move on to a sector that's been experiencing a resurgence in recent years. The automotive sector, from electric vehicles to self-driving cars. There's a lot of excitement surrounding the future of transportation.
It's an exciting time for the automotive industry. There's so much innovation happening.
What are some of the key trends shaping the sector?
Well, the shift towards electric vehicles is definitely one of the biggest stories. Consumer demand for EVs is growing rapidly, and governments around the world are offering incentives to encourage their adoption.
It seems like EVs are finally going mainstream.
They are, and the development of self-driving cars is another major trend. Companies like Tesla, Google, and Uber are all investing heavily in autonomous driving technology.
Self-driving cars are still a few years away from becoming a reality, but the potential is enormous.
It is, they could revolutionize transportation, making it safer, more efficient, and more accessible.
And then there's the trend towards connected cars. These are vehicles that are equipped with internet access and other advanced technologies.
Connected cars are becoming increasingly common. They offer a range of features from navigation and entertainment to safety and security.
The automotive sector is certainly evolving rapidly. What challenges are automakers facing?
Well, as Bloomberg reported, rising fuel costs are a concern, and stricter environmental regulations are also putting pressure on automakers to develop more fuel-efficient vehicles.
It seems like the automotive industry is facing a perfect storm of challenges.
It is, but it's also an industry that has a long history of innovation companies that can adapt to changing consumer preferences and embrace new technologies will be the ones who succeed.
Let's move on to a sector that's often taken for granted, but it's essential to our modern lives. Telecommunications. These are the companies that provide us with phone, internet, and television services.
The telecommunications sector is constantly evolving as new technologies emerge. It's a dynamic and innovative industry.
What are some of the key trends shaping the sector right now?
The rollout of 5G networks is one of the biggest stories. 5G offers faster speeds and lower latency than previous generations of wireless technology, which opens up a whole new world of possibilities.
5G is definitely a game changer. It's going to enable all sorts of new applications and services.
It is, and another major trend is the increasing adoption of cloud telecommunications companies are using the cloud to improve efficiency, reduce costs, and augment new services.
The cloud is definitely transforming the way businesses operate.
It is, and then there's cybersecurity. As telecommunications networks become more complex and more interconnected, they become more vulnerable to cyber attacks. This is driving demand for cybersecurity solutions.
Cybersecurity is a critical issue for all industries, but especially for telecommunications companies.
Absolutely. They're responsible for critical infrastructure that we all rely on.
So the telecommunications sector is facing some challenges, but it's also an industry with enormous potential for growth.
Exactly. Companies that can adapt to changing technologies and meet the evolving demands of consumers will be the ones who thrive.
Let's shift our focus to a sector that's often seen as a barometer of the overall economy: retail. This sector encompasses everything from department stores and supermarkets to online retailers.
The retail sector is a major employer and a key driver of economic growth, but it's also a sector that's undergoing a profound transformation.
What's driving this transformation?
The rise of e-commerce is having a huge impact. Online shopping is becoming increasingly popular, which is putting pressure on traditional brick-and-mortar retailers.
It seems like everyone is shopping online these days. It's so convenient.
It is, and e-commerce companies are constantly innovating to make the online shopping experience even better. They're offering faster shipping, easier returns, and more personalized recommendations.
So what does this mean for traditional retailers?
They need to adapt. They need to find ways to offer a compelling shopping experience that can compete with the convenience of online shopping.
What are some of the strategies retailers are using to adapt?
Well, as Bloomberg reported, some retailers are focusing on experiential retail. They're creating stores that offer more than just a transactional experience. They're trying to make shopping fun and engaging.
That's a good strategy. People still crave human interaction and sensory experiences.
They do, and other retailers are focusing on personalization and convenience. They're using technology to tailor their offerings to individual shoppers and make the shopping experience more seamless.
It seems like the retail sector is constantly evolving. What does the future hold?
It's hard to say for sure, but one thing is clear. Companies that can embrace new technologies and meet the evolving demands of consumers will be the ones who succeed.
Now let's talk about a sector that's been gaining a lot of attention lately. Fintechs. These are companies that are using technology to disrupt the financial services industry.
Fintech is a hot sector right now. It's attracting a lot of investment capital and talent.
What are some of the areas where fintech companies are making waves?
Well, mobile payments are one area. Companies like Apple, Google, and PayPal are making it easier than ever to make payments using your smartphone.
I use mobile payments all the time. It's so much more convenient than carrying around cash or cards.
It is, and fintech companies are also disrupting the lending industry. Peer-to-peer lending platforms are connecting borrowers and lenders, directly cutting out traditional banks.
It's an interesting development. It seems like fintech companies are democratizing access to financial services.
They are, and another area where fintech is making a big impact is in robo-advisory. These are online platforms that use algorithms to provide automated financial advice.
So you can get investment advice without having to talk to a human advisor.
Exactly. Robo-advisors are typically much cheaper than traditional financial advisors, and they're becoming increasingly popular, especially among younger investors.
The fintech sector is definitely one to watch. It's got the potential to revolutionize the financial services industry.
It does, and it's attracting some of the brightest minds in technology and finance. I think we're just scratching the surface of what's possible with fintech.
Now let's talk about a sector that's often seen as a luxury, but it's actually a significant part of the economy. Hospitality. This sector encompasses everything from hotels and resorts to restaurants and casinos.
The hospitality sector is a major employer and a key driver of economic growth in many countries, but it's also a sector that's highly sensitive to economic conditions when the economy is doing well. People travel more and spend more on hospitality services, but when the economy slows down, people cut back on travel and entertainment.
So given the current economic uncertainty, what's the outlook for the hospitality sector?
It's a mixed bag. Some segments of the sector are doing well while others are struggling.
For example,
While luxury travel is booming, high-income consumers are less affected by economic downturns, and they're continuing to travel and spend lavishly.
but it sounds like not all segments are doing so well.
Right. The budget travel market is more sensitive to economic conditions, and it's facing some headwinds, rising inflation, and fuel costs are making it more expensive to travel.
So what are some of the trends shaping the hospitality sector right now?
Well, one trend is the increasing popularity of experiential travel. People are no longer content with just lying on a beach or visiting tourist traps. They want to have authentic experiences that immerse them in local culture.
That's an interesting trend. It seems like people are looking for more meaningful travel experiences.
They are, and another trend is the growing demand for sustainable and eco-friendly tourism. People are becoming more aware of the environmental impact of travel, and they're looking for ways to minimize their footprint.
Sustainability is becoming a major focus for many industries, including hospitality.
It is, and another trend is the increasing use of technology to personalize the guest experience. Hotels are using technology to learn about their guests' preferences and provide them with tailored services and amenities.
It seems like the hospitality sector is embracing technology in a big way.
Technology is helping hotels to improve efficiency, enhance the guest experience, and compete more effectively.
So the hospitality sector is facing some challenges, but it's also an industry with enormous potential for growth.
Absolutely. Companies that can adapt to changing consumer preferences and embrace new technologies will be the ones who succeed.
Now let's talk about a sector that's been in the news a lot lately due to concerns about inflation, consumer discretionary. This sector includes companies that sell goods and services that are considered non-essential, like cars, clothes, and home furnishings.
The consumer discretionary sector is very sensitive to economic conditions. When the economy is strong, people feel confident and they're more likely to spend money on discretionary items. But when the economy weakens, people tend to cut back on their spending on non-essentials.
So with inflation running hot, what's the outlook for consumer discretionary companies,
It's a mixed bag. Some companies are doing well while others are struggling.
for example?
While the luxury goods market is still booming, high-income consumers are less affected by inflation and they're continuing to spend money on high-end items.
But it sounds like not all segments of the consumer discretionary market are doing so well.
Right, mass market retailers are facing some challenges. Rising inflation is squeezing consumer budgets, and competition from online retailers is intensifying.
So what are some of the trends shaping the consumer discretionary sector right now?
Well, one trend is the increasing importance of value. Consumers are looking for good deals, and they're willing to shop around to find the best prices.
That makes sense. Everyone is looking for ways to save money.
They are, and another trend is the growing popularity of online shopping. E-commerce is becoming increasingly convenient, and it often offers lower prices than brick-and-mortar stores.
It seems like the retail landscape is changing rapidly.
It is, and another trend is the increasing focus on sustainability. Consumers are becoming more aware of the environmental impact of their purchases, and they're looking for products that are made in a sustainable way.
So the consumer discretionary sector is facing some challenges, but it's also an industry with enormous potential for growth.
Absolutely. Companies that can adapt to changing consumer preferences and offer products that are high quality, affordable, and sustainable will be the ones who succeed.
Now let's talk about a sector that's been experiencing explosive growth in recent years. Semiconductors. These are the tiny chips that power everything from our smartphones and computers to our cars and appliances.
The semiconductor sector is a high-growth industry with a long track record of innovation. It's a sector that's driven by the constant demand for faster, more powerful, and more energy-efficient electronic devices.
What are some of the key trends shaping the semiconductor sector right now?
Well, as Bloomberg reported, one trend is the increasing demand for semiconductors used in data centers. The amount of data being generated and processed is growing exponentially, which is driving demand for more powerful and efficient servers.
It seems like everything is moving to the cloud these days.
It is, and the cloud is powered by massive data centers that require huge amounts of computing power.
What other trends are impacting the semiconductor industry?
Another major trend is the growing adoption of artificial intelligence and machine learning. These technologies are being used in a wide range of applications, from self-driving cars to facial recognition software, and they're all powered by specialized semiconductors.
AI is definitely changing the world. It's amazing to see how it's being applied in so many different industries.
It is, and then there's a trend towards miniaturization and energy efficiency. Semiconductor companies are constantly striving to pack more computing power into smaller and more power-efficient chips.
So the semiconductor sector is facing some challenges, but it's also an industry with enormous potential for growth.
Absolutely. Companies that can develop and deliver innovative semiconductor solutions will continue to thrive.
Now let's talk about a sector that's been in the spotlight lately due to concerns about climate change utilities. These are the companies that provide us with essential services like electricity, natural gas, and water.
The utilities sector is a regulated industry with a long history of stability, but it's also an industry that's facing some major challenges.
What are some of the challenges facing utilities companies?
Well, one challenge is the increasing adoption of renewable energy sources like solar and wind power. These sources are becoming increasingly competitive with traditional fossil fuels, which is putting pressure on utilities companies to adapt.
It seems like clean energy is becoming a major disruptive force in the utility sector.
It is. And another challenge is the growing focus on energy efficiency. Consumers and businesses are looking for ways to reduce their energy consumption, which is leading to slower growth and demand for electricity and natural gas.
So utilities companies are facing a double whammy competition from renewable energy sources and slower growth and demand.
They are, and they're also facing pressure to upgrade their aging infrastructure. Much of the electric grid and natural gas pipeline network was built decades ago, and it needs to be modernized to improve reliability and efficiency.
It sounds like utilities companies have a lot on their plate.
They do, but it's also an industry with enormous potential for growth as the world transitions to a cleaner energy. Future utilities companies will play a key role in building the infrastructure and delivering the services that we need.
Let's turn our attention to a sector that's often seen as a luxury, but it's actually a significant part of the economy: jewelry. This sector includes companies that design, manufacture, and sell jewelry, such as diamonds, gemstones, and precious metals.
The jewelry sector is a cyclical industry that's sensitive to economic conditions. When the economy is strong, people feel confident, and they're more likely to spend money on discretionary items like jewelry. But when the economy weakens, people tend to cut back on their spending on non-essentials.
So with inflation running hot, what's the outlook for the jewelry sector?
It's a mixed bag. Some segments of the market are doing well while others are struggling.
For example,
Well, the luxury jewelry market is still strong. High-income consumers are less affected by economic downturns, and they're continuing to buy high-end jewelry. But the mass-market jewelry sector is facing some challenges. Rising inflation is making it more expensive to produce jewelry, and competition from online retailers is intensifying.
so what are some of the trends shaping the jewelry sector right now?
Well, one trend is the increasing demand for sustainable and ethical jewelry. Consumers are becoming more aware of the social and environmental impact of their purchases, and they're looking for jewelry that's been produced in a responsible way.
That's a positive trend. It's good to see consumers demanding more transparency and accountability from the jewelry industry. What other trends are shaping the sector?
Another trend is the growing popularity of personalized jewelry. Consumers are looking for pieces that are unique and reflect their individual style.
It seems like personalization is...
Personalization is a big trend across many sectors. People want things that are unique and special, not mass-produced.
It makes sense. We all want to express our individuality. Okay, let's shift gears to a sector that's been making headlines due to its potential to disrupt traditional industries. Biotechnology. These are companies that are using living organisms and biological systems to develop products that could change the world, from new drugs and therapies to agricultural innovations and industrial enzymes.
The biotechnology sector is truly at the forefront of innovation. It holds immense potential to address some of the world's most pressing challenges, from disease to food security to environmental sustainability.
What are some of the key trends driving progress in the biotechnology sector?
Gene editing technologies are revolutionizing the way we treat diseases. Bloomberg did a fascinating piece on CRISPR-Cas9, a revolutionary gene editing tool that allows scientists to precisely target and modify genes.
CRISPR's been in the news a lot lately. It sounds like science fiction. What kind of potential does it hold?
It has the potential to cure genetic diseases, develop more effective cancer treatments, and even engineer crops that are resistant to disease and pests.
It sounds like CRISPR could change the world. What other trends are shaping the biotechnology landscape?
Artificial intelligence and machine learning are playing an increasingly important role in drug discovery and development. The Wall Street Journal had an article on how AI is being used to analyze vast data sets of genetic information, identify promising drug targets, and even design new drugs.
It seems like AI is making its mark on every industry.
It is, and another trend that's gaining momentum is personalized medicine. This is the idea of tailoring medical treatments to the individual characteristics of each patient.
So instead of a one-size-fits-all approach to medicine, we're moving towards treatments that are tailored to each individual.
Exactly. Advances in genomics and other technologies are making it possible to identify the specific genetic mutations that are driving a patient's disease, which allows doctors to select treatments that are more likely to be effective.
It sounds like personalized medicine could revolutionize healthcare.
It could. It has the potential to improve treatment outcomes, reduce side effects, and even lower healthcare costs.
The biotechnology sector is certainly a fascinating one to watch. It seems like there's a new breakthrough happening every day.
It is. It's a dynamic and rapidly evolving sector with enormous potential for growth.
Okay, let's switch gears to a sector that's been experiencing a roller coaster ride in recent years. Housing low interest rates and rising home prices fueled a boom, but now interest rates are rising and affordability is becoming a major concern.
The housing market is always cyclical. It goes through periods of boom and bust.
So what's the outlook for the housing market going forward?
It's hard to say for sure, but most experts agree that we're likely to see a slowdown in price growth. Some markets may even experience price declines.
So is it a good time to buy a house?
It depends on your individual circumstances. If you're planning to stay in your home for the long term, buying can still be a good investment. But if you're planning to move in a few years, it might be better to wait and see how the market plays out.
What factors should potential home buyers consider?
As always, location is key. The Wall Street Journal stressed the importance of choosing a neighborhood with strong fundamentals, like job growth, good schools, and low crime rates.
Those are all important factors to consider. What about interest rates?
Interest rates are definitely something to keep an eye on. As interest rates rise, it becomes more expensive to finance a home purchase.
So potential home buyers should factor in the cost of financing when making their decision.
Absolutely. And they should also shop around for the best mortgage rates.
It sounds like buying a home is a big decision with a lot of factors to consider.
It is. It's important to do your research and make sure you're comfortable with the risks before making such a large investment.
Okay, let's move on to a sector that's become increasingly important in our digital world, cybersecurity. With businesses and governments becoming more reliant on technology, they're also becoming more vulnerable to cyber attacks.
The cybersecurity sector is growing rapidly, and for good reason, cyber attacks are becoming more sophisticated and more frequent.
It seems like we're hearing about new data breaches and ransomware attacks almost every day.
It's a serious problem, and it's only going to get worse. The Wall Street Journal had a sobering piece on the rising cost of cybercrime.
So what can businesses and governments do to protect themselves?
They need to invest in cybersecurity, they need to have strong security protocols in place, and they need to educate their employees about the importance of cybersecurity.
What are some of the key trends shaping the cybersecurity landscape?
Well, as Bloomberg reported, one trend is the increasing sophistication of cyber attacks. Hackers are using more advanced techniques to penetrate computer systems and steal data.
It's a constant arms race between hackers and cybersecurity professionals.
It is. And another trend is the growing number of connected devices, which is expanding the attack surface for hackers.
The Internet of Things, right? All those smart devices that are connected to the Internet?
Exactly. From smart thermostats and refrigerators to connected cars and industrial control systems, the number of devices that are connected to the internet is exploding, and each of these devices represents a potential entry point for hackers.
It sounds like cybersecurity is a complex and challenging field.
It is, but it's also a critically important one as our world becomes increasingly digital. Cybersecurity will only become more important.
Okay, let's turn our attention to a sector that's often seen as a bellwether for the overall economy, industrials. This sector encompasses a wide range of industries, from aerospace and defense to construction and manufacturing.
The industrial sector is cyclical. It tends to do well when the economy is growing, and it struggles when the economy weakens.
So given the current economic uncertainty, what's the outlook for the industrial sector?
It's a mixed bag. Some segments of the sector are doing well, while others are facing some headwinds.
For example,
Well, the aerospace and defense industry is benefiting from increased government spending on defense.
that makes sense. With geopolitical tensions rising, governments around the world are investing more in their militaries.
They are, and this is creating opportunities for aerospace and defense companies.
But it sounds like not all segments of the industrial sector are doing so well.
Right, the construction industry is facing some challenges. Rising material costs and labor shortages are putting pressure on profitability.
So it's a mixed bag for the industrial sector.
It is, but it's a diverse sector with a wide range of opportunities. Companies that can adapt to changing market conditions and invest in innovation will be the ones who succeed.
Moving on, let's talk about the financial markets and how they're reacting to Donald Trump's return to the White House. We've got a stack of articles here from Bloomberg, MarketWatch, and the Wall Street Journal. It's like a live feed of the Trump trade in action.
Yeah, you know what's fascinating is the immediate and dramatic response across various assets. Stocks are soaring, the dollar is surging, and treasury bonds are tumbling. It seems like investors are anticipating a repeat of Trump's first term, betting on policies like tax cuts, deregulation, and tariffs to boost economic growth. But that could also bring back inflation.
Yeah, MarketWatch even calls it Trump trades in overdrive. They point out that the Dow had its biggest post-election day jump since 1896. That's over a century ago. And Bitcoin, it's hitting record highs. It's like the market is placing a huge bet on Trump's agenda. But what exactly is the Trump trade?
That's a great question. The Trump trade essentially refers to the market's reaction to the policies and economic conditions associated with Trump's presidency. Think tax cuts, deregulation, infrastructure spending. And yes, those tariffs. During his first term, we saw a significant market rally fueled by these policies. And investors seem to be betting on a similar scenario this time around.
Okay, that makes sense. So it's not just about Trump himself, but about the policies and their potential impact on the economy, right?
Exactly. And that's where things get interesting, because this time the economic landscape is different. We're already dealing with inflation concerns, supply chain issues, and a growing budget deficit. So the Trump trade might not play out exactly as it did before.
So there's more at stake this time around. The Wall Street Journal, for instance, highlights the potential for both tariffs and tax cuts. But they warn that tariffs could actually pose a bigger inflation risk now than during Trump's first term because of the current economic climate.
That's a key point. See, tariffs essentially make imported goods more expensive, which can lead to higher prices for consumers. And in an environment where inflation is already a concern, tariffs could add fuel to the fire.
And speaking of inflation, the journal also notes that wages are already growing at 3.8% a year, and bond markets are indicating future inflation at 2.3%. So throwing tariffs on top of that could really send prices soaring.
Right. And remember, inflation erodes the purchasing power of your money. So if prices keep rising, your dollar won't go as far as it used to. It's something we all need to pay attention to.
The Wall Street Journal also points out that bond markets are signaling some concern. Apparently, the surge in Treasury yields, which is basically the return you get for lending money to the government, suggests that investors are worried about a growing budget deficit and the potential return of inflation.
It's like a canary in the coal mine. When Treasury yields rise, it often means investors are demanding higher returns to compensate for the perceived risk of inflation or a less stable economy. It's a signal that we need to be cautious about fiscal policy, meaning how the government spends and borrows money.
So it seems like this Trump trade has the potential to boost the economy, but also comes with some risks, especially when it comes to inflation.
Exactly. It's a complex equation with many moving parts, and that's what makes it so fascinating to watch.
Speaking of fascinating trade, Bloomberg has this intriguing article about how the Trump trade is impacting global markets. They report that India and Japan are becoming favorites for stock traders, who are nervous about potential trade tensions with China.
That makes a lot of sense. Investors are looking for alternatives to China. And India, with its massive workforce and expanding manufacturing sector, is seen as a potential winner if companies decide to diversify their supply chains.
Bloomberg even quotes a seasoned emerging market investor, Mark Mobius, who says, India is the big beneficiary, since only India's workforce can match the Chinese in numbers and labor costs. With Trump maintaining or even extending trade restrictions on China, this will be positive for India.
It's a compelling argument. And Japan, with its focus on exports, could benefit from a weaker yen, which is anticipated as a result of Trump's policies aimed at stimulating the economy.
So it's not just the U.S. market that's feeling the effects of the Trump trade. It's rippling across the globe, impacting investment decisions in unexpected ways.
Absolutely. The global economy is interconnected, and shifts in U.S. policy can have far-reaching consequences.
This reminds me of another Wall Street Journal piece that dives into the potential impact of the Trump trade on the Federal Reserve, which sets interest rates in the U.S.
This is where things get particularly interesting. Remember, Trump has been known to criticize the Fed's interest rate decisions, and his policies could directly influence what the Fed does in the future.
The journal points out that even though the Fed is expected to cut interest rates again this week, the path ahead is far from clear.
That's right. The market is now anticipating less aggressive rate cuts because investors believe Trump's policies might actually boost growth and inflation, potentially reducing the need for the Fed to step in with further stimulus.
The journal also raises the question of whether Trump might try to exert more control over the Fed during his second term.
That's a valid concern. He will have opportunities to appoint new members to the Fed's Board of Governors, and some of his allies have suggested giving the president more power over the central bank's decisions, which could threaten the Fed's independence.
So the relationship between Trump and the Fed is something we'll need to keep a close eye on.
Absolutely. The Fed's ability to make independent decisions about monetary policy is vital for a stable economy. Any attempts by the president to interfere could have serious consequences.
Now, shifting gears a bit, MarketWatch provides a sector-by-sector breakdown of how stocks are reacting to the election. They note that banks are among the biggest winners, with the financial select sector SPDR ETF jumping 6.2% the day after the election.
That's not surprising. Banks tend to benefit from deregulation and lower taxes, two hallmarks of a Trump administration. MarketWatch also mentions that other cyclical sectors, like consumer discretionary, industrials, and tech, are showing solid gains, reflecting more on the market's expectation of stronger economic growth under Trump.
But it's not all sunshine and rainbows, right? MarketWatch points out that rate-sensitive sectors like real estate and utilities are lagging behind, because the surge in Treasury yields makes their dividend payouts less attractive.
Exactly. It's a classic shift towards cyclical stocks and away from defensive ones. Investors are betting on a reflationary environment, where economic growth picks up and inflation rises. This aligns with the broader Trump trade narrative.
Can you explain what a reflationary environment means? Some of our listeners might not be familiar with that term.
Of course. A reflationary environment basically means a period of rising prices and economic growth, often stimulated by government policies. It's the opposite of deflation, where prices are falling. In a reflationary environment, investors tend to favor cyclical stocks, companies that do well when the economy is growing, like those in the consumer discretionary or industrial sectors. They move away from defensive stocks, like utilities, which tend to perform better during economic slowdowns.
Got it. So in a reflationary environment, people are spending more, businesses are expanding, and there's a general sense of optimism in the market.
Precisely. And that's the kind of environment many investors believe Trump's policies will create, which explains why we're seeing this rotation into cyclical stocks.
MarketWatch also highlights the impressive performance of small-cap stocks, with the Russell 2000 index surging 5.8% the day after the election.
Small caps tend to be more domestically focused, so they're expected to benefit from stronger U.S. growth and lower taxes. It's noteworthy because small caps have actually underperformed the broader market for a good part of this year. This post-election surge could be a sign that investors are starting to see more value in smaller companies.
This brings us back to that intriguing story from the Wall Street Journal about the mysterious trader they called the Trump whale. He made a fortune by betting on Trump's victory, going against what the polls were saying.
It's a captivating story that highlights how individual perceptions and predictions can actually influence market outcomes, especially in events as unpredictable as elections. It also reveals the intersection of finance, politics, and data analysis in a really interesting way.
The journal reports that this trader, who calls himself Theo, is set to win almost $50 million from his bets on Polymarket, a crypto-based betting platform.
What's remarkable is that Theo not only predicted Trump's win, but also accurately called the popular vote outcome, which most analysts considered a long shot.
The journal explains that Theo based his bets on his own analysis of polling data, concluding that the polls were underestimating Trump's support.
He believed that the shy Trump voter effect was real, and that traditional polling methods were failing to capture the true level of support for Trump. He also commissioned his own surveys using what's called the neighbor method, which asks people who they think their neighbors will vote for.
So instead of asking directly, he was trying to gauge sentiment in a more indirect way. That's clever.
It is. This approach is believed to be more effective at getting honest answers from people who might be hesitant to reveal their own voting preferences.
The journal says Theo's private surveys confirmed his belief that Trump was being underestimated in the polls.
It's a reminder that markets are complex systems driven by a multitude of factors, some of which are difficult to quantify or predict. It also raises questions about the accuracy of traditional polling methods and the need for new approaches to understanding public sentiment.
It's a fascinating anecdote that adds another layer of intrigue to the already captivating story of the Trump trade. Speaking of which, the Wall Street Journal has an article that asks, what's at stake with the Fed now that Trump has won?
Yeah, it does feel like there's a lot riding on this relationship. Trump has been openly critical of the Fed in the past, especially when it comes to interest rates.
The article reminds us that Trump actually appointed the current Fed chair, Jerome Powell, but then later criticized him for raising rates.
That's right. Trump has repeatedly said he wants lower interest rates because he believes they'll boost the economy.
So with Trump back in the White House, the question is, will he try to exert more influence over the Fed this time around?
Well, the article highlights a few ways he could potentially do that. One is through appointments. He'll have opportunities to appoint new members to the Fed's Board of Governors during his term.
And let's not forget, the Fed chair's term expires in May 2026. So Trump could potentially appoint a new chair who's more aligned with his views.
Exactly. The article also mentions that some of Trump's allies have proposed measures that would give the president more direct control over the Fed's decisions. This raises concerns about the central bank's independence.
So the relationship between Trump and the Fed is definitely going to be something to watch closely in the coming years.
Absolutely. The Fed's ability to make independent decisions about monetary policy is crucial for maintaining economic stability. Any attempts by the president to interfere with that could have significant consequences.
The Wall Street Journal also makes an interesting point about Trump's economic agenda. They say it goes beyond traditional metrics like GDP growth and inflation.
That's an important observation. Trump has also emphasized bringing back manufacturing jobs, reducing reliance on China, and strengthening American communities.
These goals are harder to measure, but they're no less important to understanding the motivations behind the Trump trade and its potential long-term effects. It's a multifaceted issue with implications that extend far beyond Wall Street.
It certainly is. The Trump trade is a fascinating example of how markets react to political uncertainty and the expectations surrounding a new administration. It's a complex and evolving story with a lot of unknowns, but by analyzing the information from various sources, we've gained a deeper understanding of the forces at play and the potential consequences of this election.
We've seen how the Trump trade is impacting different asset classes, the potential implications for economic policy, and the role of individual investors in shaping market outcomes.
We've also explored how global markets are responding to Trump's victory, highlighting the interconnected nature of the financial system. It's a story that will continue to unfold in the months and years to come, and we'll be watching closely to see how it all plays out.
Okay, so moving on, let's dive into some of these market reactions coming out of this crazy election week.
Yeah.
You sent over a bunch of articles, Wall Street Journal, Barron's, even Bloomberg.
Yeah.
Everyone trying to figure out, who came out on top and who got left behind in this new world we're in.
And it's interesting, right? Because it really does feel like a global kind of reset almost.
Yeah.
We've got pieces here on everything from like those big energy giants like Saudi Aramco to like the tech darlings like Tesla and even crypto, which is always unpredictable.
Yeah. I mean, who knew that oil prices, AI, and electric cars would all be part of the same conversation after an election?
Right.
Like, it's wild.
Yeah.
So let's start, I guess, with that Wall Street Journal piece on Saudi Aramco.
Okay.
They're reporting a pretty big profit drop for Q3
Mm-hmm.
and blaming it on lower oil prices and a slump in refining.
Yeah, and what's interesting there is that even a giant like Aramco, right? They're not immune to these big global economic forces.
Yeah.
So, I mean, think about weaker demand from places like China.
Mm-hmm.
It's having ripple effects all the way over in Saudi Arabia.
Wow.
They've even had to extend those production cuts with OPEC Plus
Right.
just to try and stabilize prices.
Yeah. It makes you think about, what this means for anyone's energy portfolio, really,
Oh, absolutely.
especially with all this talk about renewables.
Yeah.
Okay, so we've got oil prices doing their thing, but now let's jump over to tech.
Yeah.
Barron's is pointing out some pretty big stock movements,
Yeah.
especially for companies like Palantir and Lattice Semiconductor.
It really is a tale of two companies, isn't it?
Yeah.
You've got Palantir on one hand, and their stock is like through the roof, and it's all thanks to, their work in AI.
Right.
They're clearly using this new tech to really, make themselves the leaders in that field.
And then you've got Lattice Semiconductor on the other hand.
Right.
And the same Barron's article mentions they're having a much harder time,
Yeah.
like they're actually announcing layoffs.
And that really shows you that, these tech companies have to adapt.
Yeah.
And they've got to innovate constantly, right?
Yeah.
Like Palantir shows you that staying ahead of the curve can pay off big time,
Right.
even when the market is a bit crazy like this.
Yeah.
But for those who are struggling to keep up like Lattice,
Mm-hmm.
it's a much more uncertain future.
It's almost like this microcosm of the entire tech industry, right?
Yeah.
The ones embracing the future are doing great,
Mm-hmm.
and the ones clinging to the past are getting left behind.
Yeah.
But speaking of embracing the future and bold moves, we got to talk about Tesla.
Right.
I mean, their stock has
Yeah.
gone through the roof since the election,
Right.
and both Bloomberg and MarketWatch are saying it's directly tied to Elon Musk's support for Trump.
Well, that's interesting, right? Because, Trump hasn't exactly been a fan of electric vehicles.
Right.
So this close relationship between Musk and Trump could give Tesla a real advantage in the EV market. I mean, could this actually lead to some policy changes that benefit Tesla?
Right.
Maybe even at the expense of their competitors.
It's like this wild card nobody saw coming.
Yeah, totally.
But it's not just Tesla making moves after this election.
Right.
Barron's also mentioned the crypto market,
Mm-hmm.
and they were predicting some big swings depending on who won.
The crypto market, it's always kind of on edge,
Yeah.
especially when it comes to global stuff like this election, because, different political stances on regulation can make or break this market.
Yeah.
So it'll be interesting to see which way this new administration goes.
Right.
Will we see crypto become more mainstream and accepted?
Yeah.
Or will stricter regulations stifle all the innovation?
It's a real nail biter for crypto fans, that's for sure.
Oh, yeah. Yeah, it really does feel like a pivotal moment for crypto, doesn't it? But hey, while we're talking about stock market surprises, remember how we were discussing Tesla's surge? Well, Barron's also pointed out that Trump Media and Technology Group saw a pretty big jump, too.
Oh, right. The company behind Truth Social.
Mm.
Yeah, not a huge shocker, I guess, considering,
Right.
the election outcome.
It makes sense, right? Investors are probably banking on the company's growth now that Trump's back in the White House. But speaking of Tesla, there's this Bloomberg piece about how Musk's ties with Trump could really shake things up in the whole EV market. Get this, they suggest Tesla might actually benefit if the U.S. cuts those tax incentives for electric vehicles.
Wait, really? That seems kind of backwards.
Yeah.
Why would any company want less support from the government?
Well, think about it this way. Tesla is already the big player in the EV game, right?
Right.
They don't really need those incentives as much as some of the smaller, newer EV companies that are still trying to get their footing.
Oh, I see. So it's like they're playing the long game. Less competition from those smaller players means more market share for Tesla.
Exactly. And the Bloomberg article also says that Musk has been pushing for a faster approval process for autonomous vehicles, at the federal level.
Oh.
So if that happens under Trump, it could give Tesla a huge head start in that whole self-driving car race.
Wow. It's like they're thinking 10 steps ahead.
Right.
But even with all that potential upside, Bloomberg NEF analysts are saying that some of those EV provisions in the Inflation Reduction Act could be targeted for repeal by a Republican-led Congress.
That's a big concern for sure. The future of those incentives is up in the air now, and they've been so important for getting people to buy EVs. I mean, will a rollback hurt Tesla, or have they already got enough momentum to ride it out?
Yeah, and what about those fuel economy and emissions requirements that got tighter under Biden? Could those be on the chopping block too?
It's definitely possible. The Bloomberg article reminds us that Trump already changed similar regulations back in his first term. That could be good news for the traditional car companies, but it might make it harder for Tesla to make money from selling those regulatory credits.
So it's a mixed bag for Tesla then. Potential wins with autonomous vehicles maybe, but potential setbacks when it comes to government help and environmental rules.
Right.
It's really hard to say which way it'll go.
Yeah, it's a complicated situation with a lot of moving pieces. But that's what makes it so interesting to break down, right? It's
Yeah.
like a real-time lesson in how politics, business, and technology all get tangled up together.
Speaking of unpredictable markets, MarketWatch is saying that some analysts think Tesla stock could jump big time, like 40 to $50 a share if autonomous driving tech gets approved under Trump.
That's a huge jump. But I mean,
Yeah.
given Musk's connection with Trump and how much he wants to speed up that self-driving stuff, it's not totally crazy, right?
Yeah.
It sounds like investors are really betting on a big regulatory change there.
It's like they're going all in on the future of transportation. If they're right, it could be a huge win for Tesla and anyone who owns their stock.
Right.
But we got to remember, those are just predictions, right?
Right.
The reality could be completely different, especially with regulations. Things can change so fast.
Oh, absolutely. Even the best plans can get thrown off by something unexpected. But speaking of companies facing some challenges, let's go back to Barron's for a minute. They had that piece on Lattice Semiconductor, and it sounds like they're not doing so hot.
Yeah, their stock took a hit after they said they're cutting 14% of their workforce, as a way to save money.
It's a tough call, but sometimes it's what you got to do in an industry like semiconductors. Things change so fast.
Yeah.
The article also mentioned that their predictions for the fourth quarter weren't as good as analysts were hoping for, which probably contributed to the stock drop.
So while some companies like Palantir are killing it, others like Lattice are having a harder time adapting. It's like a constant reminder that in any market there are winners and losers, and the ones who can innovate are the ones who survive. But Barron's wasn't just focused on the companies struggling. They also had some interesting stuff about a couple other companies, Astera Labs and Marqeta. Do you remember those?
Yeah, definitely. A real contrast between the two, right? Astera Labs, their stock price jumped way up after they reported good earnings for the third quarter, and they're predicting a strong fourth quarter too. Sounds like they're blowing past what Wall Street was expecting.
Yeah, like they're really making a name for themselves in that semiconductor world. But then there's Marqeta, that fintech company. Their stock actually tanked after they said their revenue growth is going to be way slower than expected.
Oof. Yeah, it sounds like they're hitting some roadblocks. They said it's because of more scrutiny in the banking world and changes in some specific customer programs.
It's a tough time to be in fintech with all the uncertainty in the markets right now. It'll be interesting to see if they can turn things around.
For sure.
Yeah.
Definitely one to keep an eye on. The fintech landscape is always changing, and those companies have to be quick on their feet to stay on top. But speaking of companies under scrutiny, Barron's also mentioned Supermicro, that server maker that's been having those accounting problems.
Oh yeah, I remember that. Didn't their accounting firm say they were worried about how they were managing their finances? It's never a good look.
Nope. It creates a lot of uncertainty, and that's never good for a company's stock price. It reminds us that even when things are good in the market, being transparent and doing things by the book is super important if you want to succeed in the long run.
Yeah, investors need to be able to trust the companies they're putting their money into.
Yeah.
Any whiff of shady financial stuff can really damage that trust.
Absolutely. Speaking of rebuilding trust, Barron's reported that Boeing finally reached a deal with their union workers. So that strike that was going on for almost 8 weeks is finally over.
That's good news for Boeing.
Yeah.
That strike was really messing with their production.
Yeah, it was hurting them, for sure. The new deal includes some big raises for the machinists, which shows that Boeing is serious about listening to their workers.
So it sounds like they had to compromise a bit, but getting the company back to full speed is good for everybody, right?
Exactly. A long strike would have been bad news for both Boeing and the workers. So this agreement is a win-win. It'll be interesting to see how quickly they can get back to making planes and catch up on all that lost time. But speaking of companies needing to get back on track, remember how we were talking about accounting issues? Well, Barron's also mentioned Archer Daniels Midland, that big agricultural company. They've been having some accounting problems of their own.
Oh, really? I didn't hear about that. What's going on there?
Well, it turns out they're going to have to redo their financial reports for the last few quarters because they made some mistakes in how they were disclosing their segment information.
So it's those pesky accounting details again.
Yep. And as you can imagine, their stock took a hit. Investors aren't happy when they see that kind of thing. It makes them wonder if they can trust the company's financial reports.
It's just another reminder that transparency and accuracy are super important for companies that are publicly traded.
Couldn't agree more. Investors need to know that the numbers they're seeing are a true picture of how the business is doing. Without that trust, it's hard to get people to invest and keep that stock price healthy.
Speaking of healthy stock prices, Barron's also talked about DuPont, the chemicals company. They've actually been doing pretty well.
Yeah, they had strong earnings that were better than analysts thought they would be, and they even raised their predictions for the whole year. They seem to be doing the opposite of a lot of the other companies we've been talking about, which just goes to show that even when things are uncertain, there are always some companies that are strong and resilient.
Yeah, it reminds us that it's important to look beyond the headlines and really dig into how individual companies are doing to get the full picture.
Absolutely. Having a mix of different investments and really understanding the companies you're putting your money into is key for navigating all the ups and downs of the market and coming out ahead in the long run. But speaking of navigating uncertainty, let's go back to the crypto market for a second. Remember that Barron's article that said crypto prices could go haywire depending on who won the election?
Oh yeah, it seems like they were right on the money with those predictions.
Yeah.
Bitcoin, for example, was all over the place right after the election.
Yeah, it's the market reacting to not knowing what's going to happen. Some investors might have been hoping for a different outcome, one that was more friendly to crypto, and others might be worried about stricter rules coming down the line.
It's like the whole crypto world is holding its breath, waiting to see what happens next.
Exactly. And that uncertainty is probably going to stick around until we have a better idea of how the new administration plans to deal with the crypto industry. Will they be all about innovation and growth, or will they focus on protecting consumers and cracking down on what they see as risky? It's the big question everyone's asking.
It's a real nail-biter for crypto fans. But for those who believe in the long-term potential of blockchain technology and decentralized finance, all this volatility might look like a chance to buy into the market at a lower price.
It all comes down to how much risk you're willing to take and having a solid plan for your investments. The crypto market always keeps things interesting, that's for sure.
That's one way to put it. It's a fast-moving world that's always changing, and it's got both die-hard fans and skeptical critics.
Hmm.
It's anyone's guess what the future holds for cryptocurrencies, but it's definitely a story worth paying attention to.
It really is a fascinating world to watch unfold, isn't it?
Yeah.
But let's shift back to the stock market for a sec. Remember we were talking about Tesla's stock going crazy?
Yeah.
Well, Barron's pointed out some other interesting companies that were moving and shaking. One that I noticed was Digital World Acquisition Corp. They're the company that's going to merge with Trump Media and Technology Group.
Oh, right, the SPAC that's behind Truth Social.
Yeah.
Yeah. Their stock also jumped up a lot, which I guess isn't that surprising given, the whole election outcome.
It makes sense, right? Investors are probably thinking the company's going to grow a lot more now that Trump's back in the White House. But getting back to Tesla for a sec.
Okay.
Bloomberg had this really interesting article about how Musk, being so close to Trump, could actually shake things up in the EV market. They actually suggested that Tesla might do better if the U.S. got rid of some of those tax breaks for electric vehicles.
Really? That seems kind of counterintuitive.
Yeah.
Wouldn't a company want as much support from the government as possible?
Well, it's kind of interesting because Tesla is already like the top dog in the EV world, right? So
Right.
they don't need those tax breaks as much as some of the smaller, newer EV companies that are still trying to get going.
Oh, I see. So it's kind of a strategic move then.
Yeah,
Getting rid of some of those tax breaks would mean less competition from the smaller guys.
exactly. And the article also mentioned that Musk has been pushing for the government to make it easier and faster to approve self-driving cars. So if that happened while Trump's in office, it could give Tesla a huge advantage in that whole self-driving car race.
Wow. So it's like Musk is playing the long game here.
Right.
But even with all those potential good things happening for Tesla, some analysts at Bloomberg NEF are saying that some of the EV stuff in the Inflation Reduction Act could be reversed now that Republicans are in control of Congress.
Yeah, that's a big concern for sure. The future of those tax breaks and incentives is kind of up in the air now, and they've been really important for getting people to buy electric cars. So it's like, will getting rid of those incentives hurt Tesla, or have they grown enough to survive without them?
And what about those fuel economy and emissions rules that Biden made stricter? Could those be reversed too?
It's definitely possible. The Bloomberg article mentioned that Trump already changed similar rules during his first term, which could be good news for the traditional car companies, but it might hurt Tesla's ability to make money from selling those regulatory credits.
So for Tesla, it's kind of a mixed bag then. Maybe some wins with self-driving cars, but also maybe some losses when it comes to government support and environmental regulations. It's hard to say for sure how it'll all shake out.
Yeah, it's definitely complicated with a lot of different factors at play. But that's what makes it so interesting to look at, right? It's like a real life example of how politics, business, and technology all intersect.
Yeah, absolutely.
Uh,
Speaking of trying to predict the future, MarketWatch reported that some analysts think Tesla stock could go way up, like $40 or $50 a share, if autonomous driving technology gets approved under Trump.
wow, that's a big jump.
Yeah,
But I mean, considering Musk's relationship with Trump and how much he wants to speed up that self-driving stuff, it's not completely out there, right?
Right.
It sounds like investors are really betting on a big regulatory change there.
yeah, it's like they're going all in on the future of transportation. If they're right, it could be huge for Tesla and anyone who's invested in them.
Yeah.
But of course, these are just predictions.
Right.
Things could turn out totally different. Especially when it comes to government regulations, things can change really fast.
Oh, for sure. Even the best laid plans can be totally disrupted by something unexpected.
Absolutely. So it seems like we've got a lot of uncertainty and change
Yeah.
happening in the markets right now, which honestly makes it really exciting to follow.
Oh, absolutely. It's like we're watching history unfold in real time and trying to make sense of it all. It's fascinating to see how different companies are reacting to these big changes and which ones are coming out on top.
Yeah. And it really highlights how important it is to stay informed and do your research before making any investment decisions.
Couldn't agree more. It's all about being prepared and making smart choices based on the information you have.
Moving on, let's dive into, you sent over some articles and wow, there's a lot to unpack.
Yeah.
Some pretty fascinating predictions going around.
Definitely.
Bitcoin, oil, even Microsoft.
Seems like.
The experts seem to have some strong opinions on what's coming next.
It's definitely a very volatile time right now. And,
Yeah.
volatile times always trigger
Of course.
a wave of all this analysis and forecasting.
Yeah, it makes sense.
But what I find really intriguing is how interconnected all these predictions are.
Oh, interesting.
It's not just politics that's being impacted.
Right.
It seems like these ripples are spreading through finance, tech, even energy.
Okay, so let's unpack this. And I guess maybe let's start with Bitcoin.
Sure.
One of the articles you sent from SourceName
Okay.
suggests that Bitcoin could hit like $100,000
Wow.
by January 20th,
Okay.
which is, Trump's inauguration day.
Right.
And they seem to be linking this to, potential pro-Bitcoin policies under a Trump administration.
It's a very bold prediction, but the article highlights some pretty compelling factors, I think.
Okay.
So, we've seen this pretty significant accumulation of Bitcoin by ETFs,
Okay.
especially BlackRock's IBIT.
Right.
And so this signals, I think, growing institutional interest,
Mm.
which could lead to higher demand.
Interesting.
Additionally, Trump has, previously expressed his support for crypto
Okay.
and even proposed replacing, the SEC chair, Gary Gensler, who is
Yeah.
known for being having stringent crypto regulations.
Right, yeah.
So that potential shift, from an adversarial
Right.
regulatory landscape to a supportive one, that could be a major catalyst
Yeah,
for Bitcoin's growth.
So this article even quotes
Yeah.
Jeff Kendrick, head of digital asset research at Standard Chartered.
Oh, wow.
And he's even more bullish, I guess you could say, predicting $125,000 by the end of 2024,
Wow. Okay.
and then a staggering $200,000 by late 2025.
So Kendrick is basing his prediction on, the potential impact of these pro-crypto policies.
Right.
And there's a lot of talk about a national Bitcoin reserve,
Really?
possibly through a Bitcoin Act
Interesting.
that would allow the U.S. government to,
Yeah.
acquire a significant portion of the Bitcoin supply.
Wow.
And this would grant it a level of legitimacy
So-
comparable to gold in national reserves.
So this Bitcoin Act,
Yeah.
what's the gist of it?
Well, it's still kind of in the conceptual stage.
Yeah.
But the idea is to create, this legal framework for the U.S. government to hold Bitcoin as part of its reserves.
Hmm.
Proponents say it would protect the U.S. against inflation and geopolitical risks,
Right.
while critics are worried about,
Yeah.
potential for market manipulation and the volatility of Bitcoin.
I see.
So there's definitely two sides to this.
Yeah.
Still a lot of ifs and buts.
For sure.
But, if Trump does end up pushing his crypto agenda, it could mean big changes for Bitcoin
Absolutely.
and possibly,
Yeah.
the entire financial landscape.
Yeah, that's crazy.
Yeah. So now shifting gears a bit to another market impacted by the election, oil.
Okay.
There's an article here from SourceName
Right.
And it discusses oil prices dipping after initially surging
Oh, interesting.
following Trump's victory.
Right. They mentioned, I think it was Brent crude falling to around $74 a barrel.
Yeah, so that initial surge,
Yeah. What was that all about?
well, it was mainly driven by the dollar.
Okay.
You know, the dollar saw its most significant jump since September 2022
Yeah.
after Trump's win. And
Right.
because commodities are priced in dollars,
Yeah.
they tend to be negatively affected when the dollar gets stronger.
Makes sense.
So,
And the article also brings up Citigroup's bearish outlook for oil, citing potential increased supply under a Trump administration
yeah, they mentioned that.
and possible new tariffs on China.
Yeah, and that could potentially slow down economic growth.
Right.
But it's worth noting that there are,
Yeah.
other factors at play here too.
Right.
You know, the article talks about Hurricane Rafael
Right.
and its potential impact on oil production.
Yeah. Yeah.
And while, the storm's threat has kind of diminished, these kinds of events always introduce a lot of volatility into the market.
Oh, for sure.
So it's something to keep an eye on.
They also quote Vitol Group,
Yeah.
which is
Yeah.
a major oil trading company,
Right.
saying that while 2025 might see an oversupply of oil, it's still too early to be certain.
It's hard to say for sure,
Yeah.
but they did suggest that the oil market is currently in decent shape overall,
Okay.
with strong demand for crude and some petroleum products.
Right. So it's kind of a mixed bag right now.
Yeah, it's a lot to process.
Yeah, and kind of unpredictable.
It is.
A lot of moving parts there.
Definitely. So, I guess moving on
Yeah, let's move on.
to the tech world.
Okay.
One of the articles, I think it was from SourceName,
Right.
asks,
Yeah.
is it too late to buy Microsoft stock?
You follow the tech scene pretty closely.
I try to.
What's your take on that?
Well, Microsoft stock has been fluctuating lately. It
Right.
dipped a bit after their recent earnings release.
Okay.
Seems like the market wasn't too thrilled with their cloud growth,
Yeah.
which some are, kind of seeing as a reflection of their position in the AI race.
So I guess everybody's watching how Microsoft is
Absolutely.
capitalizing on this AI frenzy.
It's the big thing.
The article mentioned their cloud platform,
Yeah.
Azure,
Right.
offering several generative AI features.
Yeah, they've been pushing that pretty hard.
So are they keeping up?
Well, their cloud performance might not be as explosive
Okay.
as some hoped.
I see.
But I think, Microsoft has a lot more going for it than just Azure. They've got this very diverse business model
Right.
and hold, really strong positions in
Mm-hmm.
productivity software like Office gaming and even, personal computing.
Yeah.
So they're pretty well-rounded.
And the article argues that this diverse approach
Mm-hmm.
gives them more flexibility to expand in AI over time.
I think that's a good point.
So they're not putting all their eggs in one basket.
Exactly.
So are they integrating AI into other products then?
Absolutely, yeah. They're already doing it.
Okay.
The article highlights Copilot,
Right.
their new AI assistant for Office,
Okay.
which uses language generation to boost efficiency.
Wow, that's pretty cool.
Yeah, it's pretty impressive.
It's interesting.
And they're also, investing in AI for personal computers.
Okay.
They're betting on the rise of AI PCs.
Wow, that's a big bet.
It is, but it could pay off big time.
Yeah.
So, I think they're taking a very measured and strategic approach
Okay.
to AI integration. Yeah.
Rather than just chasing the hype.
Right. Which makes sense, I think.
Yeah, they're in it for the long haul.
For sure. Okay.
So for our final topic today, let's talk about Uber.
Yes. The ride-hailing giant.
That's right. So there's an article here from SourceName,
Okay.
and they kind of dive into their latest earnings report,
Okay.
which wasn't exactly a smooth ride.
Interesting.
They also mentioned some interesting partnerships and competition,
Right.
like the DoorDash Lyft alliance.
Okay. Interesting.
So Uber's been facing some,
Yeah?
challenges lately.
What kind of challenges?
Well, their gross bookings growth was,
Okay.
disappointing,
Mm.
and they're projecting a further slowdown
Okay.
next quarter.
I see.
So this has put some pressure on their stock,
Yeah.
even though most analysts still rate it as a buy.
Interesting.
So, yeah.
So the article pointed to a few things.
Yeah.
affecting them, like rising insurance costs, leading to higher prices for rides.
Yeah.
That's definitely a factor.
And that might be discouraging some customers.
It could be, yeah.
And then you mentioned the DoorDash Lyft partnership.
Right, and that's adding another layer of competition.
For sure.
You know, they're offering Lyft rides through their DashPass membership program,
Okay.
which creates a more compelling alternative
Right.
to Uber,
Yeah.
Uber's own membership program.
Right. So what about all the talk about
Yeah.
robo-taxis and Tesla entering the ride-hailing market?
That's a big question.
Is that a real threat to Uber?
Well, you know, the article actually downplays the immediate impact of robotaxis.
Okay.
While, you know, Tesla has very ambitious plans,
Mm-hmm.
the technology is still in development,
Right.
and there's still a lot of unknowns.
Yeah, that's true.
So what's interesting is that Uber is actually partnering with Waymo,
Oh, wow.
the self-driving car company owned by Google's parent company, Alphabet.
Okay.
And they're planning to launch joint services in Atlanta and Austin next year.
Wow, that's interesting.
So they're not shying away from the future of transportation.
Right.
They're embracing it.
Through these strategic partnerships.
Exactly. It's a smart move.
Yeah. It seems like a win-win for both companies.
It really does. And, you know,
Yeah.
this partnership could really accelerate the adoption of self-driving cars,
Right.
which could have massive implications for, you know,
Wow, that's crazy to think about.
a whole transportation industry.
Yeah, it's fascinating to see how all these
I know, Ray.
seemingly disparate pieces are starting to fit together.
Yeah, that's the beauty of these deep dives, right?
Yeah, for sure.
We explore the interconnectedness of the financial world
Mm.
and uncover these hidden patterns that kind of shape our future.
Right.
It's like connecting the dots in this giant puzzle.
Yeah, I love that analogy.
You know, each piece of information kind of adds a new layer of understanding.
It's a lot to process, but
It is,
in a good way.
in a good way.
It's exciting.
It is exciting, you know?
Yeah.
It's all about empowering you with knowledge.
Right.
So you can make, you know,
Yeah.
informed decisions, whether
Yes.
you're an investor, a business leader,
Yeah.
or just someone who, you know,
Right.
wants to understand the world around them. Well said.
Well, this has been a very insightful conversation.
Yeah, I agree.
It's always a pleasure
The pleasure's all mine.
to do these deep dives with you.
Me too. And I'm sure our listeners appreciate
I hope so.
the opportunity to learn from your expertise.
Well, you know, it's my passion to share my knowledge
Yeah.
and help others navigate the complexities of the financial world.
Well, on that note,
Yeah,
I think we've covered a lot of ground today.
we have.
From Bitcoin to oil,
Mm-hmm.
Microsoft, and Uber.
It's been a whirlwind tour of the,
Yeah.
you know,
Yeah.
post-election market landscape.
Absolutely. And we've seen how
Yeah.
these election results are rippling through various sectors,
Absolutely.
creating both opportunities and challenges.
That's right.
So it's definitely a very dynamic.
An ever-evolving landscape.
Absolutely.
And it's essential to stay informed and adapt
You got it.
to these changing tides.
That's the key.
Well said. I think
Yeah.
we've given our listeners plenty to ponder.
I hope so. You know,
Yeah.
the goal is always to spark curiosity
Right.
and encourage, you know,
Yeah.
further exploration.
Absolutely. And who knows
Yeah.
what exciting developments await us
Right.
in the coming weeks and months.
Only time will tell, but
Yeah.
I'm sure we'll be here to break it all down for you.
Absolutely. So we'll see you all tomorrow morning
Okay.
with a fresh batch of headlines from the major financial magazines.
Sounds good. Until then,
Until then,
happy investing.
happy investing or just happy contemplating
Oh,
the wild world of finance.
that's right.
Okay. Sounds good.
All right, take care.
You too.
Sure. So ETFs or exchange-traded funds,
Right.
they've become pretty popular as
Yeah.
investment vehicles.
I've heard of them. Yeah.
Yeah. They essentially let investors buy a basket of assets,
Okay.
like stocks, or in this case, Bitcoin,
Right.
through a single fund.
Okay.
So this makes it easier for like
Yeah.
institutional investors, like hedge funds or pension funds,
Okay.
to gain exposure to Bitcoin
Yeah.
without directly managing all the complexities of holding the cryptocurrency themselves.
I see.
So it simplifies things for them.
So the fact that these ETFs,
Hmm.
particularly BlackRock's IBIT, are accumulating Bitcoin
Right.
suggests that these big players
Yeah, the big institution.
are getting more comfortable with it.
Exactly. You know, that increased institutional interest often translates to higher demand,
Mhm.
which can drive up prices.
Interesting.
And the article even mentions
Yeah.
that ETFs could soon hold around 1.1 million Bitcoins,
Wow, that's a lot.
which is a significant chunk
Yeah.
of the total 21 million apply.
So this potential for Bitcoin to reach, $100,000 or even higher.
Yeah.
It's not just based on
Right.
speculation.
No, there are
but on some pretty concrete trends.
real trends. Yeah.
But of course, all investments carry risk.
Absolutely.
And Bitcoin is known for its
Volatility.
volatility.
Right. Yeah, it can be a wild ride.
But the factors driving its current growth trajectory suggests it's
Yeah.
more than just a passing fad.
I think so. It's here to stay.
Okay, so a lot of people are still,
Yeah.
skeptical of
Yeah,
cryptocurrencies.
I understand that.
But you can't deny
For sure.
their impact on the financial landscape.
Absolutely. It's changing things.
Speaking of impact,
Yeah.
let's shift back to the oil market.
Okay.
We talked about Hurricane Raphael
Right.
and its potential to,
Disrupt production.
disrupt production, right?
Okay.
But the article from
Yeah.
Source Name
Mhm.
also highlighted some
Right. Yeah.
interesting insights from Vitol Group,
Yeah, they're a major player.
which is a major oil trading company.
That's right.
So what did they have to say?
Well, they pointed out that while 2025 might see an oversupply of oil,
Well,
it's still too early to be certain.
right. You can never really predict these things.
It's a complex market.
For sure.
So many factors at play.
Like what kind of factors?
Oh, geopolitical tensions, global economic growth,
Right.
even technological advancements in
Right.
alternative energy sources.
Right.
So it's really a moving target.
They also emphasized that the market
Mm-mm.
is currently in pretty decent shape,
Yeah, they seem to think so.
with strong demand for crude
Right.
and some petroleum products.
That's a key takeaway, I think.
Yeah.
Even with all the,
Yeah.
political and environmental concerns surrounding fossil fuels,
Of course.
global oil demand remains strong,
Okay.
particularly in emerging economies
Interesting.
with growing populations
Yeah.
and rising middle classes.
Makes sense.
They need energy.
So even with the push towards,
Yeah.
renewable energy,
Mm-hmm.
oil isn't going away anytime soon.
I don't think so.
It's going to be interesting to see how that all plays out.
It is. It's a transition,
For sure.
but it'll take time.
Right. So it's a very complex situation with a lot of moving parts.
Absolutely. It's a puzzle.
But understanding these dynamics is crucial
Oh, for sure.
for investors and
Yeah.
policymakers.
Absolutely. Got to stay informed.
Now, let's zoom back in
Okay.
on Microsoft for a second.
All right.
We were discussing their diverse business model
Right.
and its advantage in
Mm.
the AI race.
Yeah, they're well positioned.
The article from SourceName specifically mentioned
Okay.
their productivity and business processes segment,
Right, which includes Office.
which includes Office, right?
Yes.
So how did
That's
we do?
Well, that segment saw revenue growth of 11%
Wow, that's not bad.
year over year
Okay.
last quarter. And much of that growth
Yeah.
can be attributed to
That's-
integrating AI into their Office products.
They highlighted Copilot,
Mm-hmm.
the AI assistant for Office,
It's pretty impressive.
which uses language generation
Right.
to boost efficiency.
It's a game changer
It sounds like it.
for productivity.
And it's not just about,
Yeah.
individual productivity.
Yeah, it goes beyond that.
The article mentioned that Microsoft is also
Mm-hmm.
betting on the rise of AI PCs.
That's right.
What does that even mean?
Well, they believe that AI will become like
Okay.
an integral part
Hmm.
of the personal computing experience.
So,
So imagine a PC
yeah.
that can anticipate your needs,
Okay.
personalize your workflow,
Wow.
even learn from your habits.
That sounds pretty futuristic.
It does, right?
Yeah.
It might have seemed far-fetched a few years ago.
I guess so.
But with the advancements in AI,
Right.
it's becoming more and more plausible.
Yeah. AI is changing everything.
It's moving fast.
It's amazing how quickly technology is evolving.
I know. It's hard to keep up.
And it's exciting to see companies like Microsoft
Mm-hmm.
really pushing the boundaries.
They're leading the charge.
Finally,
Yeah?
let's revisit Uber.
Okay.
We discussed how their earnings report
Right.
wasn't as stellar
It wasn't great.
as some had hoped,
No, they've been facing some headwinds.
with those rising insurance costs
Yeah, it's a big one.
and increased competition.
A lot of competition out there.
But the article from SourceName
Mm-hmm.
also mentioned a potentially game-changing partnership with Waymo,
That's right.
the self-driving car company.
Owned by Google's parent company, Alphabet.
Alphabet, right?
Yeah.
So what's the deal with that?
Well, Uber and Waymo
No.
are joining forces
Mm.
to launch joint services
Yeah.
in Atlanta and Austin next year.
Wow, that's a big deal.
It is.
So instead of viewing robo-taxis as like
Uh,
a threat, Uber is embracing the technology
They're smart to do that.
through collaboration.
It's a strategic move.
It seems like it.
Allows them to,
Yeah.
tap into Waymo's expertise
Right.
in self-driving technology.
While leveraging their own
Exactly.
network of riders and drivers.
They both bring something to the table.
So it does seem like a win-win
It really does.
for both companies.
Yeah, I think it has the potential
Yeah.
to significantly accelerate
Oh,
the adoption of self-driving cars.
wow. That's a big thought.
It is, and that could have
Yeah.
far-reaching implications for the
Wow.
entire
Yeah.
transportation industry.
That's crazy to think about.
It is. It's a whole new world.
It is. It's fascinating to see how these
I know, right?
seemingly disparate pieces
Yeah.
are starting to like
Fit together.
a puzzle.
Yeah.
That's what I love about these deep dives.
Me too.
We explore, the
Yeah.
interconnectedness of the financial world.
Uncover these hidden patterns that can
shape, if you know.
shape the future. Yeah.
It's exciting stuff.
It is exciting. It's a lot to process,
It is,
but in a good way.
in a good way.
Yeah, it's thought-provoking.
It's all about,
Yeah.
empowering you with knowledge.
Right.
So you can,
Yeah.
make informed decisions.
Right. Whether you're
Whether you're an investor,
an investor,
a business leader,
a business leader.
or just,
Yeah.
someone who wants to understand the world around them.
Yeah, make sense of it all.
Exactly.
Well said.
Well, this has been a very insightful conversation.
I agree. The pleasure's all mine.
The pleasure is all mine.
I always enjoy these
Me too.
deep dives with you.
They're a lot of fun.
I'm sure our listeners
I hope so.
appreciate the opportunity to learn
I just love
from your expertise
sharing my knowledge.
and helping others
Yeah.
navigate the complexities
Of course.
of the financial world.
On that note, I think we've covered a lot of ground today.
We have, from Bitcoin to oil,
Yeah.
Microsoft and Uber.
It's been a whirlwind tour of the post-election
The post-election
market landscape.
landscape.
And we've seen how these
Yeah.
election results are
Rippling through.
rippling through these various sectors,
Absolutely.
creating
Both opportunities
both opportunities and challenges.
and challenges. Yeah, it's a mixed bag.
So it's a very dynamic
Mhm.
and ever-evolving
It's always changing.
landscape.
That's the one constant.
And it's essential to stay informed
You got it.
and adapt to these
Changing.
tides.
That's the key.
Well said. I think
Yeah.
we've given our listeners plenty to ponder.
I like to think so. The goal is to
Sparks that.
spark curiosity
Curiosity, yeah.
and encourage further exploration.
Exploration, right?
Yeah, we want people to dig
heard.
deeper.
Dig deeper,
Yeah,
exactly.
who knows?
Yeah, who knows?
What exciting developments
What's next
await us?
in the coming
Weeks and
months?
What unfolds?
It's a wild world out there,
It is a wild world of finance.
especially in finance.
That's right. But that's what makes it fun.
Yeah, it really has been a roller coaster of a week, hasn't it?
It has. The markets are definitely reacting.
And who knows what's next, right?
Right. That's the thing. The only certainty is uncertainty.
Absolutely. But that's what keeps things interesting.
Exactly. Always keeps us on our toes.
I wouldn't have it any other way.
Me neither.
That's why we do these deep dives, right?
That's right. To make sense of it all.
To help people understand what's going on.
To give them the tools they need
Exactly.
to navigate this crazy world.
Well said. Well, I think we've given our listeners plenty to think about today.
I hope so. It's a lot to digest.
But it's all important stuff.
It is. Knowledge is power, especially these days.
Couldn't agree more. So, until next time.
Until next time.
We'll see you all tomorrow morning with a fresh batch of headlines from the major financial magazines.
That's right. We'll be here to break it all down for you.
Until then, happy investing.
Happy investing, everybody.